everybody. Welcome to November 1st. And this is Dan Sheridan from Sheridan Mentoring. We're going to take a look at the market right now, and then I'll look at maybe a trade idea. But as you look at the market, here we are Tuesday, November 1st. Right now, the SPX is just kind of floundering early in the morning here. I think we've been open about 45 minutes so far. The market, we're at 38.66, down 5. The big news is the Fed tomorrow, Wednesday. With the Fed Wednesday, I think most people are expecting, okay, they're going to raise the rates. But again, a lot of times on those things, the big thing is after, when they have the press conference, what they're kind of alluding to in the future. Have they changed the way they're looking at it? So that's probably going to be the big impetus this week as far as moving the market. I mean, we have some jobs report on Friday. So what do you do, right? Or what are some thoughts? As you look at this, we've come up, over 300 points, from the lows in the last couple weeks or so, right? And you can see it's just a price chart, 1-year price chart, using TD Ameritrade, Think or Swim. But you can see some big candles there. You say, what does that mean? It just means that there's big movement, between the high and the low, days where maybe the difference between the high and the low in SPX might be 70, 80 points. So right now, we're above some of the moving averages. We're still under the 200, but we're above the 50. The VIX is coming down. We're at 26. We were relative not long ago, a week or two, over 30. How do you position yourself? Well, the first thing is, well, what are you doing, right? So what do I do? I don't know what you do, right? If you're a spec trader, okay. If you're a speculative opinion, I think this or I think that. Well, as we look at tomorrow, you can see the expected move. It's about 74 points tomorrow. What does that mean in English or Spanish? It means that's like a 1 standard deviation move. They're saying the market, 68% probability, could be up 74, down 74. Is that a pretty good move? Yeah. It's almost 2 standard deviation. And I think a lot of it's because of the big, the premium pumped in to a lot of these option prices, because you got the big announcement tomorrow. Because you can look at here, it's interesting. The expected move just for today is plus or minus 28 points. You just add another day, you don't just go up double, you go up to 74 points. And then the next day, you only go up 14 points. So I think there's a lot of nervousness about tomorrow. So from a speculative, you could bet on, okay, I think it's going to move, right? I think we're going to move, which, 75 points is, about a 2% move, right? In the SP. That's quite a move. Do you think it's going to move or not, right? That far. So from a spec, you can go, now, let's take a couple scenarios. Let's take an idea there. Well, what are some cheap, what are relatively cheap speculative moves that won't rip your face off if you're wrong, right? So let's just take Nov1st is tomorrow, right? So they say the expected move is 70 points, could be. Let's put it up there maybe at 60 points. And I'm going to look at I'll call it a time bomb butterfly. This is one of the cheaper speculative plays one can do. You're not going to make as much as if you're long a call or long a call vertical, but they're more forgiving. They're not going to rip your face off, but they're very good better yield potential than a long call or a vertical spread. So let's say I place this up 60 points. The expected move is 73, up 60. Let's just say I'm taking a bullish. If you want to be, if you think it's going down, you could do bearish. You can do both sides if you don't know. But let's just give an example. If you were more bullish, 60 points up from where we are, 38.70, would be 39.30. And again, you could do this for the downside. You can do two, but I like these directional butterflies. And again, they don't cost that much dollar-wise. 39.30. And let's just say I go 3,900, 39.60. So today, I didn't know where I was going with this. I just stay with the directional, even though we do more non-directional. You see what I got here? 39.60. All right. So if you look at it here, move this, make it a little bigger so you can see it. So here's where we're at currently in the market, 38.71. The short strike of this butterfly is 39.30. So you can see on tomorrow's expiration, this thing is costing, because I'm 30 wide, this is costing around $330. If you want to get cheaper, you just narrow the strikes. Take the 3900 to 3910 or 3960 to 3950, make it 20 wide. But if you look at this, if we, for a $300 purchase, you could see $300 debit, you can see, if we land in this profitable area, the blue graph is at expiration, and that's between 39.60. If Evil Knievel lands between 39.60 in this 3900 area, you could see you got a wide open what you could make. I mean, you could make 3 times what you paid for it. The risk is what you pay, right? So if the most you want to risk in a spec trade is 300, you do it 1 time. If you want to risk 1,000, you do it 3 times. You could go further out. Duration will be more forgiving if you're wrong, but you're not going to make what you could possibly make, if we get in that area today or tomorrow. So these are more forgiving than other directional plays like buying a call or buying a put or buying a vertical debit spread. So anyway, something to think about. I call it the time bomb butterfly. Cheap things out there that you can put that give you a good opportunity to make 3-4 times what you paid for it. But they're speculative, so that's why you control your size. So that's what I got for today, folks, leading up into the Fed interest rate decision tomorrow. Maybe the next time I talk, we can look at both of these. You can, if you don't know which way it's going to move, but you think it could move pretty good, you can put one on each side. If you're more bearish, you can put one on the put side. But I just chose, not because I have an opinion, just for an example today. Anyways, a couple things coming up next week on Sheridan Mentoring. You can check our front page. We have 2 new classes starting next week. Monday kicks off a 3-week class on short-term trades. We'll be doing, for those who like range-bound trades, we'll be looking at calendar butterflies, iron condors that expire at the same day. You put them on today, they expire today. Or you put them on today, they expire tomorrow. And I like those, especially because you don't have the gap risk. And I like those. First time we've done a class like that. Mark Fenton will be supplementing that. And for those who like more directional short-term plays, we'll be putting on live trades each class on Monday and Wednesday, trades that maybe expire Friday, directional. So you get best of both worlds. The other class starting up next week is the Tuesday, the 3K class for November. We've been doing this for a year and a half. We've had good results. And that's an opportunity for you to learn the craft, but do it with someone holding your hand. You get a lot of learning, but we're basically going into the market on Tuesday and Thursday. We're teaching you, but we're putting trades on based on what kind of the market's telling us. And what's neat about the 3K class is everything's live trades. You can see record of all the trades. And for beginners, it's great. An hour before each class, we have a boot camp for those who are beginners or would like a lot of work on these strategies and these concepts. And then for experienced, the 3K class. And that'll give you more with the adjustments, and we really go thorough into these trades. So anyways, a couple things coming up. Have a great day, everybody, and we'll see you later. Thanks.